Alrighty, welcome everyone. Today we'll be going over 50% retracements, and this is a perfect lesson because I actually used it a lot in my trading today. If you've maybe seen like these lines here, like with the 0, the 1, the 0.5, you're probably like, what in the heck is that? But I'm going to show you what that is right now. So what is a 50% retracement? Well, it's essentially, if we have price going like this. What is 50%? Well, you can get this tool. It's called the fib tool. Some people maybe use it. They have like a whole bunch of like settings on this. I personally just use the 0.5. You can also use, I think it's called the gamma box, that gives you the 0.5, and my colors kind of look like a trade. But essentially, the way I use this, I mainly use the fib tool, is you basically mark out the 50% of this. So we'll actually make this even better. Boom. So you get the top of the range and the bottom of the range, you mark it out, and boom, this gives you a perfect 50% range of that range. And so the way I use this is usually, let's say maybe we have like a fair value gap here, right? Maybe I'm looking to tap into this fair value gap and also tap right into that 50%. And from there, hopefully we form a fair value gap here, and you can catch a nice little inverse here and then kind of run this to this high, oops, sorry, or then like another high up here. So let me show you guys like a real example. I think this is a very self-explanatory like concept, but also like if, say for example, we want longs, right? I have a target all the way up here and we have this 50%. I want to say, okay, if there's a fair value gap here, we have a 50% here. Every single time, right, you want the 50% to just bounce right off of it. You just want to see an aggressive push off it. If we aggressively push through this fair value gap, keep pushing below this low, we get an inverse fair value gap, and then we also blow through, like we close below the 50%. This could tell us, okay, maybe like this 50% isn't too strong and we might not actually push back up. We might continue to just keep going down. You can also use it in the terms of, say we kind of get something like that, right? We kind of take out this, and then if we are like, maybe you are actually short on the day, like I want to target down here, you could say, okay, we blew through 50%. This is telling us that we might go shorter, or we might short here. I want to see us then push back up, reject off this 50%, and then continue to trickle down, and this would give you a great trade right here. It's a very, again, self-explanatory concept, but I use it a lot, and I think you guys should too. I think it's very helpful, and the way you use this in the live market, I don't want to fully get rid of everything, but I'll go ahead and just get rid of everything. So let's say, let me go ahead and just clean this up a little bit. Okay, boom. So this is kind of like what I'm looking at for the day, right? We'll go all the way back to about 9:30. Okay, 9:30. I see overnight we made this huge run, right? We have Asian highs up here. We have these lows down here. What I'm going to do is go ahead, grab the Asian highs, bring this all the way to the lows here. So this gives me, go ahead and get rid of this line. This gives me a perfect retracement level. This gives me the 50%. I'm going to go and mark this out as yellow. And so boom, what do we have here? Okay, we have Asian lows stacking basically with then the 50% of the day. So what can I assume here? Okay, even on the higher time frame, right? Yes, we're on the lower time frame, but I could probably assume if we want to go lower today, what are we going to do? Reject off that 50% and continue to trickle down. Let's see what this looks like on the higher time frame. All right, boom, what do we have? Okay, well we have again that whole leg, and we kind of have 50% of the time frame now. The 30 or the 1 hour kind of glitched into the 50%, but look what it does, right? Immediately taps into it, pushes back lower. So let's go ahead and zoom on a little bit further and kind of see how it reacts off that 50%. Okay, boom, we tap into it there. What do we see immediately happens? We immediately push back lower. Okay, so then what can we assume from here? Okay, since we're kind of in this choppy range, I want to say, okay, if we continue to push lower, we close below these lows, maybe there's a target down here I could target. Or since we retraced off of it, let's just see if there's another way that maybe we could retrace off of it and then push back through and push higher. So let's see what happens. I do know what happens here, but I'll let you guys watch out what happens. So you're going to see, okay, boom, we tap back into those lows, and then price continues to, couldn't be really any slower. As you'll see, we're about to tap back into the 50% here. Holy clicking. Okay, wait. I'm pretty sure we didn't push higher. Let's see. Okay, never mind. We do not push higher. But notice how we immediately, right, we tapped into these 50%. What happens? We immediately push lower, come take out these lows, or we actually fail to, but we take out the order block down here, and then we kind of dance around near the 50%, right? But the way I also use this is, let's say, okay, boom. Okay, we have that 50%, but I also notice we have a 50% of this range, right? We have a kind of a wide range here. We have a nice wick up here. We have a nice low down here. What do we see happens? After we tapped into that 50% up here, what happens? We immediately retrace back into then the 50% of this range, and you could have caught maybe a little nice trade there. But then again, we kind of then just keep trickling around. I mean, you can do this over and over. Maybe we take this range. What do we see happens? Literally to the tick, this then tapped all the way back into 50% of that range, and then it kind of just keeps repeating itself. Like, you could literally just use the 50% range as just a range to target every single time. This is one way I use it, but in my opinion, the best way to use this, let me go find like a news candle for you guys. Or I'll just draw it out because it might be a little hard. Let's say you guys know how news candles are, right? Maybe it's like CPI or PPI, boom, we're just making normal price action, and out of nowhere we just get a massive candle like this. Okay, there's two ways you can go about this. Usually I like to mark the 50% of the candle body, right? But you guys know there are some candles that kind of, they go up, down, then we kind of just close with like a small candle, right? In that circumstance, then get 50% of the wick, so you can go like this. But when it's a big candle and it's kind of taking up most of the wick, go for the 50% of the candle body. And essentially what you can do is, as you see, you mark out 50%. And basically what you would do is you would want price to kind of keep pushing up. You would want to see price kind of go up a little bit, and then from here, okay, if you're in, this is past 9:30, and you're like, all right, I'm looking for a trade, all you have to wait for is literally, maybe there's like a gap here or a gap here. You just want to look for one nice inverse to the downside, maybe with the CISD right here, and boom, you can try and catch this trade to the 50%, as I said earlier. These are really good trades. I've used these a lot. This is one of, honestly, my favorite setups. It's just there all the time. And then again, I just use the body because I think it's more probable, because obviously, yes, you can use the wicks, but in what I've just found is that the bodies are just more probable, and it's just an easier range to catch. Just because the wicks can sometimes be a little bit like far out, and it kind of just makes the range like a little bit just not as like pure. I really don't know how to describe it. It is just truly what I have found while I've back tested and forward tested for all these years. So again, that's something for you guys to try. But again, if you get the small candle body, then go for the wicks. But if you get a big candle body, go for the candle body. And then literally, someone talked about this today, right? Like, I think we take the same trades. Okay, yeah, we might take the same trades, but the way I look at my trades are different, right? Because because at the end of the day, your entry model is different from then like what you're looking for. Like, sometimes there are trades that are just good trades and you should just take them. But in this circumstance, right, okay, this is what I'm looking for. Yes, you could catch any trade within here. You could catch this trade. You could maybe try and top tick this, try and catch it to the downside. Or in my case, I look for my entry model, right? This is the exact piece of the pie entry model. We come up, we create a fair value gap, come up, we inverse two fair value gaps, and then we get the CISD, and boom, that is the entry model, and you can go ahead and take your trade to the down to the 50%, and boom, that's exactly what you can use. 50%, I mainly use them for targets. I don't use them for entries. But again, as I said earlier, they're a great way to just determine what does price want to do. Like, for example, in this case, if we're pushing lower, and maybe you have the bias to the upside today, right? Or yeah, we'll go to the upside, right? You would not want to see price come in, push out, and then just immediately keep pushing lower, right? What you'd want to see is a strong reaction off the 50%. You would want to see us come down and then literally just wick into the 50%. You don't want to see a candle body close below it. You want to see a strong wick with a candle body close above the 50%, and then maybe look for an inverse here. Boom, get inverse fair value gap, and now we're pushing back up. Obviously, you'd want to wait for a better setup, but this would tell you right here, since we just wicked into the 50% and immediately pushed back out of it, this is a strong reaction level, and we're most likely going to keep pushing higher or lower depending on what you're looking for here. Now again, vice versa. If you're looking to the downside, what you'd want to see is us just completely disrespect this 50%. You just want to see a strong candle close below the 50%, maybe get like a retracement, like maybe, okay, we get the close below, price is going down, and then what you would want to see is actually like a retest of the 50%. You'd want to see, obviously you can still enter on this, like if you think there's a good setup, go ahead and enter, like don't wait for anything. But if you would most likely want to see us retest the 50% and then push lower, and then maybe get your setup here within the CISD, and boom, now you can cook to these lows. So that's kind of what you want to use it for, is kind of just determining where does price want to go. But then you can also just use it for targets if it's kind of this scenario. This scenario is really good for targets, and I've had a lot of success using this. But again, it's a very simple concept, but it can be used in many ways. It can be used to find a setup, or it can be used to find a bias on the day, or just where price wants to go. Again, it doesn't have to be the big news candle. That could also, like what I was talking about earlier, like this scenario. Oh shoot, can't really go back, but the scenario of the 50% reacting off, right? This could just be a range, like maybe this is a 4-hour candle or something. You would want to see us, okay, if you want to look higher, you'd want to see the 4-hour wick into this and then kind of push higher. Or then vice versa, if you're looking lower, you'd want to see the 4-hour close below the 50%, and then boom, you can be like, okay, now the bias is short, I'm going to go ahead and look for something here. So it doesn't just have to be the news candle, but in my opinion, the news candle works best. But as you guys saw today, I mean, there were 50% all over the place, and it worked very well. Let's go ahead and see. Like, this could be another good example here. We have a nice range. What do we see? Reacts perfectly into that 50%, and what happens? We eventually push lower. If this had kept pushing higher, okay, I'd assume we'd come take out this wick, but instead we reacted strong off this and took out these lows instead. I mean, this literally, you can go and find so many examples of this on the chart. Like, okay, boom, this is a good news candle, right? Okay, news candle right here, perfect example. Okay, what do we have? Like this is a perfect example of just take the candle body. You don't need to take the wicks on this one. Just take the candle body. What do we see happens? Okay, boom. This is literally exactly what I was just talking about, right? Okay, kind of get your setup. We're going up, going up. You don't really get a setup in here. Maybe on the 32nd you do. What do we see happens? Well, maybe if you entered like right here, boom, you can literally just target that 50%. And what happens as soon as we tap into that 50%, we bounce off. And then if this kept going up and closed maybe above this candle, okay, I'd assume we come take out these highs. But instead, we bounced off, retested, and pushed lower, coming out and taking out these lows. So, I mean, that's about as perfect as it gets. You could also enter on this, be like, okay, we pounced in, retested, and now we just closed below the 50% with the CISD. You can now just take this to the wick right here and call it a day and catch your short on the day. And then vice versa, right? If this then decided instead of closing below, maybe we got like then a CISD to the upside, okay, I'd assume that maybe we take out these highs, maybe this high, and then maybe even possibly this order block or this high. So that's exactly how you should use it. That's a perfect example. Do you guys have any questions on that? I mean, here's another example. I mean, you can just take the 50% of this range to here. What do we see happens? You could have possibly caught a trade here, and we close above, retest, and keep pushing higher to these highs. Yeah, I mean, it's a very simple concept, as I said, but it's very, very useful, and I think you guys could definitely start using it in your trading. If you're back testing or forward testing, start just looking at these bigger ranges, marking out this. And again, they can't just be like a small range. Like, it can't just be like something like, I mean, even this would still work, right? But like, you want like a volatile range. Like, you want something very strong, kind of like today, right? Where we just make a huge move. Like, we just started from Asian and just dumped the whole day. We just dumped. At some point today, I would expect that retrace, and coming into like 9:30 open, we kind of got that retraced, and then we pushed off of it pretty hard, taking out like a low kind of, and then now we're kind of pushing back up. So you wouldn't want to just like mark out any range, because you just want to kind of get the main range. Like this, you wouldn't really want to mark out. Like, this isn't really too useful. Instead, you'd want to go for the bigger range, which would be, in this circumstance, this range right here. And again, when you're marking these out, if it's a range, take it from the biggest wick in that range to the lowest wick, or the highest wick to the lowest wick is the best bet. In these, you don't really use the candle bodies. That being said, do you guys have any questions on that? Nah. All right, perfect. Well, that'll be it for the day. Nice little 50% retracements. Tomorrow we'll be going over time alignment and macros. So it'll kind of just be like talking about, I've talked about time alignment a good bit, but this will just kind of be talking about like the macros to trade for the day. There's multiple macros you can trade for the day with my setup, but I just personally like the 9:30 to 11:30, but we'll talk about that a lot more tomorrow. For you German guys, I mean, if you guys are like a late night trader, you could start kind of trading the second macro I talk about, and then maybe if you want to trade even earlier in the day, Max, I'm specifically talking to you. There's another macro earlier in the day that you could trade. but it's just not as probable. So we'll talk about that tomorrow. But with that being said, do you guys have any more questions? I'm assuming not. So 1530 is dead. Yeah, 330 is kind of whatever. But we'll talk about that later in the next video. So that being said, I will catch you guys tomorrow. Again, stay safe, don't trade at all, and I'll just see you guys in the next trading session. Deuce, everyone.